China's export growth accelerated for the first time since March as factories rode out the tariff roller coaster. Exports in June were up 5.8%, while imports rose 1.1%, both figures beating estimates. Let's get more with Bloomberg China economy editor Alan Wong. Alan, what does the data tell us about how China has been dealing with the latest tariff headwinds from the U.S.?
China's data is telling us that China's export machine is humming along rather nicely despite all the tariffs and the trade war that is still continuing. Don't forget that despite the trade truce, we're still looking at tariffs as high as 45 or more on Chinese products entering the United States. And that's not counting certain tariffs that apply to different products and materials. And so the number is telling us that China has managed to find markets to sell its wares, even though exports to the U.S. in June fell more than 10%. And the previous month, when 145% tariffs were in place, the fall in exports to the U.S. was even more severe. And being able to find new markets for Chinese exports is important, also because domestically China has an overcapacity issue. So if manufacturers could find new customers outside the U.S., then China's export machine is in safe hands. But there are lots of uncertainty with tariffs, which we have discussed extensively, including how the coming negotiation between China and the U.S. and a potential summit between President Xi and President Trump will pan out, because those will decide whether the two countries can have a lasting trade agreement that can ensure at whatever level of tariffs that trade can remain flowing between the two biggest economies.